In this video, we're going to talk about the correct way to set up your bank accounts to properly manage your money when you're a side hustle entrepreneur. Now, it's important to note that there are lots of different ways of configuring your finances, but what I'm going to explain and show you now are two typical scenarios. The first scenario is the scenario that most people have, and it's this one. This is how most people set up their bank account when they decide to start their side hustle and start making money. This is typically what they have. They have their personal bank account, and they get personal income from their regular job, let's say, and that goes into their personal bank account, and that's pretty much where most people are at. But then they have the side hustle that they've started, and what happens is their side hustle income starts to come in, and they think, well, where should I put it? And they put that in their personal bank account. This, let me tell you, is wrong. Of course you can do it, and to be completely transparent with you, I did the same thing many years ago when I first started out. It didn't take me very long, though, to figure out that this was a nightmare scenario. And the reason I say it's a nightmare scenario is because you have no real way of being able to quickly look at your account and see a true picture of what your business and personal finances are actually like. You can't do a health check. You can't look into your personal account and go, aha, I know how much sales tax I have, if any. I know how much income tax I owe, if any. I know how much money I have spare with respect to my business for operational expenses. And I know how much of this is my personal income, which I could spend with abandon. And the answer, of course, is you don't when you have it configured this way. So this way is just bad news. Now, there is a better way to do it. It goes a bit like this. You're going to set up your personal accounts, which if maybe you already have, and you're going to have a checking account. Now, I've numbered this one 4. You'll see why in a minute. And a savings account. Now, this can be any kind of savings account, really. I mean, I'm not here to tell you, the way to the ones to choose for your business or your banking, because I don't know where you are in the world. But typically checking accounts don't make any money. Some of them do if you leave lots of money in them, but I'm working on the assumption that you have a regular checking account that makes you nothing, and perhaps what you can do is open up a savings account, and if you put some money in there, it might not make you a lot, but it's making you something. Remember, money that makes you money is money you don't have to work for. Okay, so that's your personal structure. So you started with an initial checking account in the original example, and here I'm saying you need to at least set up a savings account for your personal, for your personal well-being. However, now let's start talking about the side hustle. You're going to need 3 accounts for the side hustle. I'm going to want you to open up a checking account, which I call operations. Operational expenses is where money comes in and goes out of. This is your business day-to-day checking account. I call it operations, or OpEx, operational expenses. You're going to want a simple savings account. You're going to need 2. So the number 2 here indicates the second account that you create for your business, and the number 3 indicates another one. Sales tax and income tax are nothing more than simple savings accounts. If you look at under personal, you've got number 5, and under side hustle, you've got 2 and 3. Those are really just simple savings accounts. Places where you can park some money. Okay, so looking at this, you can now see that I'm recommending that you have 5 bank accounts. 2 checking accounts, 1 for business, 1 for personal, and 3 savings accounts, 1 for personal and 2 for business. Here's why. When sales come in to your business through your side hustle activities, all that money goes into account number 1, operations, or OpEx. When you spend money running your business, say your printer runs out of ink and you need to buy a printer cartridge, you would buy that from your operational expense account here, number 1, known as operations. When money comes in, though, if you're in a position or anywhere in the world where you are charging sales tax, I'm in Ontario, and if I bill anybody in Ontario, I have to charge something called the HST, the Harmonized Sales Tax. And if I was to do that, that is where I would put the sales tax. So let me give an example. Let's just say, for the sake of argument, you're somewhere in the world that charges a 10% sales tax. If you were to generate a side hustle and you decided to charge that person $1,000, and let's say that's what it was for, and you added on your 10% sales tax, that would be $1,100. $1,100 would come into operations. You would immediately take $100, which is the sales tax, and move it into account number 2, sales tax. You follow? Okay. Account number 3 is income tax. This is where you put money to pay the tax man, because every time you generate any income, once you've taken out expenses and other operational considerations, etc., what is left is generally classified as personal income. And if it's classified as personal income, unless you're somewhere in the world where they don't charge income tax, in which case, lucky you, I hate you, not really, well, kind of, what you have to do is actually put aside a certain amount of income tax. For the sake of argument, again, I don't know where you are in the world, but let's just use 25% as a marginal tax rate. So going back to our example of $1,000, $1,100 when you include the 10% sales tax, I would suggest to you that if you decided, well, here's what I want to do, James. I've just billed somebody, $1,100, which is $100 in sales tax, $1,000 in actual billings, but I want to keep the $1,000. I would say to you, okay, so this is how this breaks down. $1,100 comes into operational account number 1, OPEX. $100 is taken immediately from the $1,100, reducing that balance to $1,000. And that $100 goes into sales tax. So at the end of the year, you can pay your sales tax. If you decide you want to take the full $1,000 for personal income, then you need to set aside, in our example, 25%, $250 moves into your income tax account. And the remaining $750 is slid over into your personal account, checking, which we've identified here as account number 4. That's how the flow works. 1 to 2. If you take it as income, something goes into 3 and it flows into 4. Now, if you wanted to be a good business person and really make your money work for you, then really what you're supposed to do, according to best financial practices, is set aside 10% minimum of your income for savings. So let's continue with our example here. We had $750 coming into our personal checking account, which would mean, if we're going to use our example and run it to the full conclusion, that we would take 75 of that 750 and we would put it over into savings, leaving, I believe, a grand total of $675 sitting in checking. So that is how it flows. Now, the best part about this is simple. It means that you can go to your personal checking account, account number 4, at any point in time, and without having to consider a darn thing, you know that any money in that account is yours to spend. All right? You can go and look in your savings account, and any money in that savings account is yours to spend, although I would recommend you leave it there because that's the point of savings. You can go over to your operational account, and depending on when your tax year ends, for myself, and for anyone who's not maybe registered as a company or hasn't specifically set up differing start and end tax years, typically your tax year starts and ends on December 31st and January 1st, and usually you end up ponying up taxes sometime around April. Again, it's different for perhaps other parts of the world, but for the purposes of this example, let's just use a calendar year. So the income tax that would fall due, sometimes in the spring of the following year, you'd simply be able to go to your income tax account knowing full well that you have sufficient funds sitting there, and you will have sufficient funds because this is not a piggy bank. Any money that comes into you goes there. You'll be able to turn around and work with your accountant, tell them how much income you've made, tell them how much you've spent on expenses. Elsewhere in this course, I'll show you how to track and log all that. And they will turn around to you and say, well, you owe this much tax. And you'll be like, yay, I've got it. And then you can sit there and begrudgingly write a nice large check. And you're done. And you get to start all over again the following year. One thing that's interesting is that, and I'll talk about this in another lecture, is what happens if you get to the end of the year and there's a surplus money in that operations account. Now, I'm sure you can figure out what I'm going to suggest, but we'll talk about that later. Anyway, that is how you set up your accounts for optimal configuration. There are a few other ways that we can go a little further, but Honestly, this is the best way to get started. You set up 3 accounts for your business, 2 accounts for your personal. You have 2 personal accounts, one is checking, one is savings, and you have 3 accounts for your business, one is checking and 2 are savings, and you set them up that way. And of course, if you're so inclined, like I have done, I've set all mine up online. They're all interconnected. I can move money around with a push of a button, and makes life very, very easy. Okay, that was how to set up your bank accounts.